that will be tutorial and hands-on session. So since we are beginning our lecture on trade, and that too linking trade theories to that of different competitions and linking with gender role of female. So we have to understand and revisit trade theory once again. And we have to cross-check what are the important assumptions addressed in different trade theories. I know that you almost all must have read, but since it is a holistic program, holistic in the sense it has to be started with some basics, then we steadily hit on or touch upon some of the dimensions. So the first lecture is on evolution of trade theories, classical to new classical theories of trade. Now, to be very frank, I haven't made PPTs in detail. This is simply the starting page. Okay, 2 hours are supposed to deliver. Hence, it is our participants who are going to lead in terms of discussions. I will give enough space for this. Okay, I know that your background is on this, and with the good starting point, we can have our further clarity in differentiation. Okay, so when I check with international trade and the present time, especially the recent debates on international trade, I think you must have updated yourself with the challenges posed by U.S. economy, especially in Trump's regime. So Trump's regime is interpreted in various ways. A couple of points need to count so far as the present discussions are concerned. Then only we will connect to our theories and explain how things will go correctly. So in Trump's regime, as per their ministries and their discussions, they have been steadily restricting their foreign aid. And they are also imposing taxes, higher taxes. And they openly challenge to the countries, different countries in the world, there will be retaliation. And even some of the developing countries have parallelly, mentioned, like China, even to some extent in Indian context, that why not retaliate as well? Why we are not that big in main segments? So counting a few from the different data sets, I can mention very clearly that Indian trade and its composition is largely led by service sector. As faculties mentioned that earlier 90s cases are different than that of present time. So far as India's trade is concerned. And within services, it is IT and ITES services that really count the highest component. Now, I am not going to speak every time. I will try to derive some of the perspective from you. Yeah, I'll give signals. It's not like I'm asking questions. I'm trying to understand how we can discuss and engage ourselves. And the GAN module is for this only. That more participation, more discussions, and more clarity on a particular topic or debates. Given the context we are discussing now, I will eventually derive the discussion to the role of a theory. A theory is necessary while discussing all sort of things. Okay? Now I have simply mentioned that a country which is leading in terms of GDP, in terms of many indicators, had started creating different possible threats to the country, which are a bit unconventional in nature. Unconventional, it's obvious if a country is giving foreign aid to another country has the right to restrict. Right? There is no harm in restricting. Why should I give freely to other countries? There must have been some parallel benefits. Now, fast debate is, should a country restrict foreign aid to other country? What would have been the advantages the country usually derived by giving foreign aid? That's the first hypothesis. So that the theories are accordingly derived or accordingly specified. Without the problem statement, theories are meaningless. Okay. So first context is US must have been adding value because of foreign aid. What are those? Few points can be discussed at this moment.
Human capital.
First of all is human capital. Market. Catering to the global market. Though in foreign aid there are no such binding constraints. Okay. But eventually the markets are aligned with the components of or with the extent of foreign aid to a specific country. That's two important points we just mentioned. When I say markets are connected, markets are actually connected to another country. Then how to define market? Which are the theory very relevant for us in explaining a product to be rolled according to the country's specialization. Or markets are actually addressing the specialization and its directions for trade. There must have been some theories. So we have to highlight some of it through classical to get a new classical. Now again, not necessarily we are just objectively answering the context. We have to come through some of the theories which are essential in discussing the genesis of trade theories. Okay, so then next aspect to discuss is if foreign aid is given and used to be given, why they are stopping. One of the answer is, especially if we look at India's context, India is claiming as fourth largest economy by GDP. If you are fourth largest in the globe, what is the need of taking foreign aid from another country? Why are you begging for any support from other country? All support wherever are there should have been closed. I get so far as argument is concerned. But why were there are so many newspaper articles on this. This is not a good deal by US. Should not have been stopped. Is it the case that GDP is answering everything, or beyond GDP, it's really mattering, much so far as trade negotiations are concerned. Actually, in fact, it is not just GDP number. Though the other field and the people expertise, they are simply, enjoying or simply, claiming that, or they are very complacent, saying in the sense that our GDP is too huge. If it is not distributed correctly, then GDP has actually no such value. Average per capita income might rise due to a rise in GDP, but the distribution aspect is largely missing. Hence, we have to also discuss some of the models in this evolution of trade, which are explaining the distribution aspects. So distribution by sector, or distribution by person, or distribution by income. Isn't it? So some classification and their respective theories must have been addressed. Okay. Anyway, I mentioned that I don't have PPT, but I have some blank space are there, but I'm not going to discuss much. Let's not listen to the voice or the views from me. Let's cross check whether those are correct or not. Somehow I tried to keep it in one page, and then we'll steadily emphasize each of the directions. Going back to the 80s or 17th century in the globe, maybe European economy largely, even before that, India's commercial transactions were claimed to be very good, but officially they were not registered. But if we go back to the text of India's commerce with Southeast Asian economies, We used to have spice trade, and many other, forms of trade as well. But the modern language of economics and trade hardly emphasize those aspects. In the literature, we hardly see any systematic presentation of India's richness in terms of trade. The modern way of emphasis was given from the late 18th century, 18th century trade transactions. So why is it the case that such emphasizations were not made specifically to India's attachment with other countries? If we read the Indian text, Kautilya's book also, there are special emphasis on these aspects. But anyway, let's not specifically emphasize that aspect. Whatever the theories you have read earlier, we can recount and discuss whether those are correct or not. Quite obvious where the modern way of presenting, India international trade and its theories is through the market. The market is the common point of discussion. Of course, when we say market is not just counting the transactions, it also counts different entities of the market. So entities are the factors, largely the factors, and among the factors, earlier it is mostly codified or presented through labor. There are no such other forms or the technological developments are not made, in a larger parlance to explain the market and its functioning. It is only largely through labor. But laborer and its value, labor contained in any product and its value is manifested in its products from the pure classical, explanation of international trade. But before classical, it is pre-classical or sometimes called the mercantilism period. So I will actually lead you to the discussion I have. I have been teaching this over so many years. I was in IFT for 3 years and also been teaching this paper. So I can throw different directions of different periods, especially for mercantilism. But I can use the board to explain some of the facts in mercantilism period. If you remember mercantilism, anyone can start discussion, then I'll keep on adding and we'll interact more. Then I'll explain each of the regimes of international trade theories. Okay, so mercantilism period, anyone
16 to 18
discussing?
16 to 18th century.
16 to 18th century. Okay. Okay, second point.
Export-led growth.
Export-led growth. Third point.
Not sustainable, according to economists, different economists.
This theory is actually not scientific. Okay, it's 4 point. All right.
Sir, imperialism as well.
Imperialism was mostly, active, and it was actually the responsibility, responsible factor for explaining trade, isn't it? Fifth point. So far as mercantilism is concerned. Okay, as I already mentioned, you have also a point.
It was based on barter system.
Barter system, not that correctly. We'll come back to it. Okay, good that you have highlighted it. And about zero-sum game, etc., we'll explain. No, we're not going to spend time more on this because that theory is not that scientific. Okay, you have rightly mentioned. We will cross.
So scientific or sustainable? It's not sustainable.
That is why I use the specific word as scientific. Scientific in the sense it's not sustainable. Also, it is not answering many technical differences in trade. Okay, that is explaining both the things. Okay. So again, nowadays the moment we are mentioning sustainable is confined to environmental factors. Okay, so anyway, we are not starting the discussion through environmental factors. It is something else. Okay, coming back to all sort of regions. Okay, starting with imperialism was or the colonialism which stepped off the directions of mercantilism. Mercantilism, the word is largely explaining the merchants. Merchants, their duty is to actually trade, to supply, to export. That is the first aspect of a merchant. And since going back to the early 16th century, then through 17th century mostly, where mercantilism period was active, during that time, we know very well that the transport system was not efficient. They had to depend on river, they had to depend on sea. On-road transport system was not that active. And whichever the thinkers they were there during that time, like Thomas Moon, etc. So they specifically they are called physiocrats. During that time, they used to be called as physiocrats. They are the thinkers to the Queen's government. Queen's government, if I use the word, it is referring to the British colony. But actually, it's not only Queen's government; it is even much more than that. Because it's linked to most of the European economies, Spain as well, Spain, UK, even France. Okay? So Italy, those most important countries where mercantilism as a concept emerged and then discussed as a pre-classical phase of international trade. Okay, one word to start with imperialism and the order. There's a moment to say imperialism and the order to be followed, to be respected is that you have to export. It's not both side transaction. There is the trade was restricted to one side only. Okay? So and more the content of export, the more the country will grow. This is what was the discussion. And then why we kept this session early, even in our announcement that we mentioned, though it is recorded, still it is good to specify to all of you. We know that the external faculty will be reaching a little late, so better to start with this so that by that time we'll be ready to take the session.
But I get one question. So how can it be one trade, one way trade? They are demanding that is why these people are exporting.
That is why it is not sustainable. Okay, coming to it. How come it is? In the present time, we ask the question, how come it is? Imagine the time where they were living, there is no question of questioning. Okay? You have to trade. And how, it's still possible. They continue for a century, right? It's not a small period. Imagine a century and they were successful in exchanging their commodities, not even exchanging supply, exchanging their own body. Okay, and it was valid for a century, not a small period. 100 years is not a small period. How it was possible? Because of order. It's because of the colonies. The moment they conquer somewhere, they capture somewhere, they're exporting whoever the country are were captured. They are bound to accept it. There's no other discussions at all, isn't it? Hence, it was continued. But the movement, British colonies started, occupying spaces. British colonies, especially, not the Vasco da Gama type of regime, where the first one who, first adventure, the person who discovered the world, through sea trade, sea routes, etc. So now they are not necessarily from British, colonies. They are from different colonies. So their ideologies are different than the British colonies. Even in the present time, British economy is, if you ask or if you check the rules and regulations of UK vis-a-vis other European countries, their rules and regulations are more stringent, more mature, because they learned from experiences from different colonies in the world. They had to struggle for validating their rules and regulation across the globe. Hence, the moment they starting running their own country, so there are many corrections already made. So let's not stress that way at this moment. We'll go back to our context. Context is it's how come one-way trade. The famous term is called zero sum game. Hmm. So they believe there are some belief system. Even in the present time, whatever we propose and somehow through data we prove that. So and the moment it is published in some of the standard journal, people started again referring that, but not necessarily that is true. That's not correctly checked. Even if we entered, so we do some consistency check, some robustness check, still things are not necessarily 100% correct. So, but that time there are no such checkpoint at all. Coming back to the time period, time where these concepts were coined, but one of the assumptions was very true. That is zero sum. Uh, in totality, no one is gaining. That is called zero sum.
Everyone's gaining is the loss of another value.
In totality, if somebody is gaining, another is losing. Is actually losing. That means in totality, on the average, no one is gaining. Okay. So one's gaining actually compensated by loss of another. This is what is the zero sum game. Now you can ask to any friend who are very new to stock market, they will say the same. Why are you investing? If you are your price is rising, another is actually losing. Okay, if you are earning profit out of selling at a higher price, somebody is actually going to lose. This is the common belief in stock market. Is it the fact you are still believing this? Stock market, if you are transacting in shares, somebody is selling at a high price, obviously another one is going to lose. No? You see saying strictly no. Why?
So there is a dividend. Suppose I have purchased some a share from X. She has purchased it at 100. She sold me to what 150. Still she has like got 50. I am expecting dividend from the company or like appreciation of the share price. So like it is not it did not came as a cost to her.
So when not necessarily it's zero sum game because of the overall asset value matrix where the investors invested their money. So all may simultaneously grow. But those are very fast time when they don't understand the asset value in any company and their valuation. They are obviously having this common understanding that why to invest in stock market is very risky.
And that's 20,000.
20,000 tiny amount. so far as scholars of international trade is concerned. Okay, that was for the past time. Okay, but I am not going to share that number at this moment. Otherwise, we might stay and I will be in trouble. Okay, so there are some evidences of mine as well. So especially the 2010, 2008-9 crisis, bubble crisis. Okay, so not go by this, and there are some evidences I track over here. Okay, so coming back to these things, we'll discuss in our recess time. Coming back to the discussions of the mercantilism, first one is that they believed, with the limited understanding of resources around the world, that if I will be supplying something, I actually lose it. I'm incurring my cost to supply another things. Hence, another one is going to gain and has to pay it back. As simple as that, based on their limited understanding. The movement, sea trades, the evidences of sea trade increased, and then many other transactions happened. Especially the late 17th century, with the ideas of the British economists, British philosophers, they countered it and specifically mentioned it is not correct. We are actually referring to the regime of Smiths, classical the classical economists and their contribution to international trade. I have the PPT and everything, the gold, the triangular trade, the gold transactions, how it has helped, how the sea trade actually forced some of the colonies to make them a slave in the trading process. All sort of evidences are with me. If I keep on stretching, it will be 2 hours to speak. And then mercantilism, I used to take 1 hour in my trade session. Hence, I'm not stretching much. I have emphasized your viewers starting with zero sum game, then role of imperialism, then some of the points like export is an important indicator. Okay? And not just export, it is within the export, it has to be more gold content based exports. Those are essential. Anyway, so one of the strong critique of the mercantilism period is its non-sustainability. The classical economists specifically emphasize that this is not at all scientific. Whatever they say is not correct. It's not zero-sum game, first of all, and it is not going to be, sustainable. If somebody is exporting and completely objecting another one to export to their country, then obviously there will be some disconnections. This is what was the problem in mercantilism period. So I'm not emphasizing now on this. If you have any query, then in our schedule, you might have seen evaluation to gain ideas and understanding. So it will be completely MCQ based for 30 minutes or 20 minutes. We'll discuss that and not just evaluation to you, evaluation for us. So you are also going to give value. I'm not saying, it should be around 5, right? Okay, coming back to this. Basis of how each of the school of thought actually discuss about the ideas of trade. The modern ideas of trade has actually started or included in the literature is through the classical school of thought. Each of the features are very relevant while comparing the moderns. First of all, when we say classical theory, we will check with basis of trade, then we'll check with factors of production, then returns to scale, then market structure, technological differences, specialization, etc. Now, trade patterns explained by which reason, still these are not complete. Still, the indicators which are given are not complete. Okay? We would have to add some more relevant points. That might be your point of thinking so far as MCQ questions are concerned at the end. Okay, we may ask you questions beyond this, but we are explaining. More than 70% questions will be from the PPT and discussion. At least 20 to 30% questions will be beyond that. Okay, so then only you have something to fill up and contribute to the. Okay, coming to the basis of trade. So in the classical period, Ricardo we have mentioned specifically, not Smith. Adam Smith, and its contribution to trade was largely on the labor value, not specifically on productivity. So the absolute value of any product, whether it is going to be demanded elsewhere or not, are the point of discussions. again, when I use the word demanded, may not be perfectly right. There is no such specific attachment to the explanation of demand. It is only one side again. It is forcefully mentioned to the supply side perspective. Okay, labor content of the product is expected to be adding value in another country. Okay, so we will discuss this when I say productivity or the factors and its productivity. Large in classical period, it is the labor content. Labor content. More the labor content is considered to be more valuable. That time there was no such clear classification of or estimation of understanding labor value. The market was not perfectly regulated or not at all regulated. So more the labor content, more was the value of the product. It's coined in Adam Smith regime of trade. If I'm missing something, you can bring in your discussion. I think I can add. No, it will be more enriching. Then, when we say labor content, of course, the basis of trade is not correct. Just labor content in a product is not explaining everything. Imagine a table or a chair, a mobile, just a number of hours you are mentioning without specifically highlighting its value. Okay, just we are saying labor hours are important. Okay, so but whether labor hours are actually sufficiently available or not, nowhere it was discussed in classical period. Whether if we are forcefully deriving labor content to define the value of the product, we never check their availability. It's another question. That is why next theory, the new classical theory, emphasize on its endowment. It's positioning, right? Positioning of the labor content or other factors. It's not just labor that matters, it matters with capital as well. The endowment is actually referring to the resource available. And so resources mostly emphasized through two growth factors, labor and capital. Okay. And in our evening session, I will be discussing with you the exact data sets, the real data sets, where and I will also share with the code, data code and the data sets beforehand so that we will carry and operate simultaneously. We will explain how far resources are actually available in different countries in different time period and how we can define their endowments or can take some of the models, right? Including, and I'll come to that. At this moment, I think I have not discussed in detail. Now, when we say it's availability of resources, still it is not completing. We nowhere, so far till this model, we nowhere mentioned specifically on the market structure. We simply assumed that market is perfectly competitive. Market, I think that is being here actually. Market is perfectly competitive. Now onwards, it's imperfectly competitive structure. So I think some of you must be writing your thesis on the market structure and its role on international trade.
Sir, in classical theory, in the Ricardian theory, the technology differences was the basis of trade.
Technology differences, as I know is written, actually it is yes, correct. So actually, why am I mentioning there's a reason, I'll come to it. Initially, I think, you are right. It was mentioned as yes, but I actually cancelled and edited to no. No, I need to actually specify it's fine. Why am I saying? By technology, they say labor content, actually, in classical. So in modern interpretation of classical theory, it's actually not techniques. It's purely labor. It's therefore they are saying productivity. They are saying total factor productivity. as actually the technological difference. But that's not the answer in the present time. I deleted actually. It was there. Initially, it is yes. You are right. I deleted and mentioned no in the modern way of presenting the theories. And I put that you pointed out. It's actually yes. Good. So when I say it is market, in reality it is not perfectly competitive. In reality, it is imperfectly competitive market. And uh, at a particular point of time, we can imagine a market to be functioning with the features of perfectly competitive setup, uh, but, but not necessarily true. Is there any example where we can cite a product to be perfectly competitive? Any? It is possible. It is a microeconomic context. It's not macro where in our thinking we feel as if we need to cite the macro evidences. It's not the case. In macro, it's not possible. In micro context, a particular time T, at a particular time period T, market can be imagined and can be explained as perfectly complete.
Weekly markets, weekly vegetable markets.
Weekly vegetable markets. We are referring to the physical market where most of the features of the products they are selling are following perfectly competitive sector. This is what I say.
Except Mandi.
Mandi.
Only paddy.
But if you are saying mandi, this is an industry, right?
Nowadays
Again,
there
the
are
vegetable
people
market.
selling only paddy.
Caddy.
Only paddy.
So within mandi, it has to be a product, right?
Yes.
Product where most important feature of the perfectly competitive market is its price, pricing structure. So at a given point of time, pricing is actually more or less rigid. So we can refer the context as perfectly competitive setup. Forget about these things. Now let us think about pharmaceutical sector, pharma. Pharma and its generic products. Generic medicine, paracetamol.
No, but still, there is information problems there. Which is the generic, how much it is actually generic, how much or global it is. That the individual doesn't know. It may be pure competition in some respect, but the information asymmetry problem is there.
Because we have this
No
branded.
single market is perfectly competitive, that is for sure. But at a particular time, when we stick to most important features of perfectly competitive market, it is value. Pricing structure especially are largely addressed. Number of competitors are huge. At a time, we are referring to, isn't it? But anyway, if you refer to a mandi where large number of vegetable vendors are selling the product, they also stick to the rigid price. Okay, so anyway, coming back to these features, I have to explain that why market, in reality, when we cannot able to cite example as perfectly competitive one, hence most of the most of the markets are structured with certain degree of imperfections. Imperfections are largely explained through information as we just said. Information-wise, markets are not functioning well. People are not completely aware of the product and their function and their movement in the market. Hence, markets are or firms are bound to be operating with the features of imperfectly competitive setup. So coming to earlier time, why we assume this is correct? Earlier, it is bound to be competitive setup because price, whatever the colonies decided the price, that was the one. But of course, information-wise, it is not reaching to the entities of the market.
Also, sir, it could be one case, no, that capturing the economic side is not always easy. So we take a lot of assumptions. So initially going ahead with those assumptions, and later on, as development happened in the theories, those assumptions were relaxed, and then imperfect competition came into picture. So that could also be one case of why initially it was there and now it isn't.
True. I mean, you're right. over the time with different evidences, we counteract and we actually validate whether it is still to what degree competitive structure is valid, right? So that is tested through data. But my point is, point of emphasizing is this, that features of perfectly competitive structure was largely varied during time due to a forceful impositions of the colonial idea, isn't it? Imperial ideas. Hence, features of the markets are valid except information network, etc. Okay. But the movement, the time when we started counting from 18th century onwards, initially from Smith's version of transactions to that of Ricardian version, where relative importance were given, relative cost structures were emphasized. Then it's productivity wise, productivity mapping of the labor content were actually cross-checked. Net barter terms of trade is used to be the directions where Ricardo mentioned how things can be transacted and the advantages can be derived out of transactions. This is what we studied. Okay. Coming to the new trade theory and new trade theory, I think Professor Pavel will be highlighting with the exact theory and explain with the data in the practical session. But it's the first lecture we have to just touch upon what are there and what are not there. So due to the imperfectly competitive setup eventually occurring in most of the market structure, the outcome of these markets are actually either catastrophic or it is actually adding more value in terms of prompting for innovation. While discussing the market to be competitive, it's considered to be justifying the market. The market is just addressing justifying the values to the last, or adding value to the last people or to every people. So while distributing or justifying the resources in terms of a distribution function of the perfectly complete setup, the scope for innovation was not there.
But sir, Arrow's theory says that perfectly competitive market are more innovative rather monopoly markets.
Agree? Yes, coming to the welfare theorem, in the long run, what they say, in the long run, when resources are well distributed, it is rather adding more value. This is what they say. But in terms of innovation and its outcome in the short period, I think Arrow's theory is not explaining in detail.
Yes, sir.
They explain for a long term analysis. Okay.
So in corporate competition, like the marginal productivity theory is like mostly associated with it. Like if every factory is paid to according to its productivity, then product exhaustion happens. So there is no surplus available. If there is no surplus available, then how reinvestment goes for
innovation. Anyway, there are again, if you link to many theory, as he has also highlighted, is correct. In the long run, if we are saying there is no net marginal returns left, hence scope for innovation is not there. But actually, in the long run, if marginal returns are still not left, then everybody is actually creating a vacuum in the system. In the long run, it is going to be troublesome. That is how the market is not functioning correctly in the long run. There are some, disequilibrium. There are some, imperfections, evidence over time due to this differences in net, productivity and its market value. Anyway, coming back to the understanding, there used to be two theories where either you distribute correctly or you are not distributing correctly. if you are distributing correctly, of course, society is justified and long-term values are there. We are not actually going to address those theories in terms of trade and all. We are explaining with our limited knowledge on innovation. If in at least in the short run, there are scope for economy of scale of production. Yes, economy of scale of production to imperfectly competitive setup. Is there any question where probably I'm not hitting on the connection between imperfectly competitive market and its economies of scale? Any question? Yes.
In new trade theories, if there is no technological differences, then how we are getting increasing returns to scale? Is it because of capital or what we are doing with labor?
If there is no innovation, no, we are not. What's your question? Can you please repeat?
There is no technological difference. What does it mean? It means there is no technological innovation. Second, if there is no technological innovation, then how we are getting increasing returns to
Okay, coming. Okay, all right. Good question. So basically, in here, these are not, in reality true, they are assumptions. We are actually explaining the assumptions with no specific new technologies. That is why you are saying that actually there were some component. Assumption was that there are productivity. Okay, they also assume that technology-wise there are differences already. Hence, through labor we can have trade. But now they are saying actually assume that there is no such other reasons to explain to trade. It is due to the market functioning. It is due to the market functioning which is actually adding productivity.
then, sir, how
The assumption.
we are increasing the current level productivity
Without
innovation or
The
technological
technological differences at the level of countries. You mean that it is the technological differences at the level of countries.
yes.
Okay.
We are actually discussing assumptions. We are discussing assumptions.
Right, what your point we are talking about, if we are talking about any specific country, and there is no technological difference,
but there is
then
no
How we are going to add value and how productivity, etc., economic scale, etc., are explained. Okay, so I got your point. I'm saying there are those who are working with efficiency and productivity analysis. There are two ways of explaining pure efficiency and managerial efficiency, etc. Isn't it? So in that case, first of all, we are saying any country. I mean, the trade theories which you are explaining at this moment, it is not necessarily due to their endowment with different technological setup. Getting my point? It should be from the function, from the pure managerial or the pure efficiency level of explaining the new technologies. Yes, technological differences will be there. I'm not denying that. They will be there. It is not due to their endowment level. Their endowment level should not be enriched with higher technological level. Neutralizing the level of technology, whether one country is still growing because of the market functioning. But getting my point?
so then what kind of market functioning is there?
Market functioning, actually, I'm not going by the equation. I will actually explain this. We say if it is imperfectly competitive market functioning, then there is scope for innovation. That is first answer we have already started discussing. Why is it so? Is it because there is a context of monopolizing the extent of profit? And this is possible when the market is imperfectly competitive. Either it is in the form of monopolistically competitive market, or it is oligopolistic structure, or it is even monopoly structure. But most prevalent functioning is monopolistic competitive structure, and where the markup pricing is comparatively higher. Markup pricing. Do you remember this word?
Sir,
P minus MC
while talking about market, I specifically want to know about which market, related to labor market or the product market, and what kind of functioning is there.
Okay, got your point. From this onwards, even in TLDs, we are only discussing about labor market, classical pitch. But these onwards, it's not only labor market. We are not decomposing by market, by which, whether it is in labor market they are functioning well, whether it is in capital market they are functioning well, it is the entire market. When you read the specific, data and in specific countries' evidences, you can find out whether it is actually due to the capital or due to the particular sector. Okay, we are just trying to mention through the theory how a market, when it is very competitive, the markup pricing is not there. When markup pricing is not there, then the scope for innovation is very less. But my point here, it is derived from the economic functioning and setup. So when markup pricing is actually neutralizing the scope for innovation, the country cannot have higher degree of economies of scale. Is it clear? So hence we are actually discussing economy of scale, or then account specifically the new trade theory. The point which you wanted to understand is actually here. It is the new trade theory. They emphasize it's not just the economy of scale entirely, it is the sector and their specific productivity. So earlier, the productivity and its differences were not mentioned specifically. From the new trade theory, these aspects are emphasized. Hence, it is mentioned at firm level productivity. The specific firm level productivity actually is going to answer whether a country is actually growing or not growing over the time period. Okay, so those over the lectures will actually emphasize one. Hence, the new one they have been mentioning specifically on farm specific exporting is the answer. It's not just the entire export. Our country is more or less endowed with technological know-hows at this moment, service sector oriented. But we are now deriving economy of scale entirely for the all resources. That's completely meaningless. When we are mentioning answer for the trade and its basket of commodities and India's focus should be on every product, I think it is completely meaningless. It should be a farm specific. Okay, farm specific. That is why the new trade theory are important. Hence, this entire GAN module is actually emphasizing on. Probably Professor Pavel's lecture will be addressing more on this.
So you are saying that due to imperfect competition, there is a markup pricing, and that markup pricing is disincentivizing for innovation, or whether it is
incentivizing innovation, because there is a gap between your pricing structure as compared to your marginal.
So basically,
E minus MC.
That innovation is happening within industry or within sector, but not at country level.
Country level.
Okay, so these outputs are not affected by the technology shocks towards the country, but at a sectoral level.
Correct. Now, this is how. It's not just the endowment or the technological changes that is answering, it is actually due to the productivity or the scale of management, all right, of the country. Hence, the country must be focusing on those scale of management or the specific sections. Is it fine? I know that unless we don't check with the original data and where the farm level productivity is differentiating this, you cannot clarify. So it ends, our other lectures are actually specifically designed for this purpose. I'm sure. We'll discuss on this later. Then, okay, when I'm missing some of the points, my duty in this lecture is to actually charge. That is why the past lecture is all about. You should be, here enough in asking questions or other sessions. Why you told this, it's not right. You told that, let's check. Okay, so that's my duty, the past lecture. Good that coming to this, I think more or less I have discussed. Okay. Increasing returns.
Small question.
Huh.
New trade theory and new trade theory. What using returns to means if we are not talking about technological returns?
What name of the theory is or how it is?
Leads to individual returns.
Okay. All right. There are two ways of explaining, increasing returns to scale. First of all, in the discussion with many evidences, either it is vertical or by horizontal approaches. Vertical specialization or horizontal specialization. So two-way microeconomics explained called returns to scale and returns to scope. So returns to scale is all about vertical specialization. More with the same variety, if you are producing, and we have identified this sector is very potential. This particular farm is contributing more with the limited availability of resources. When a country already tapped that, they will actually allocate more budget, facilitate more budget. So that or in international trade transactions, they will facilitate those sectors in terms of less taxes, right? Or they may promote through special economic zones, so that the product will be produced in large scale. When productions are made in large scale, it is quite obvious, not to argue further, that there will be economy of scale and there will be increasing, increasing interest to scale. That is one. Second one is, it's not just the vertical, specialization, it's also horizontal, it is fine. Some ancillary industries where, the minimization of cost is expected. It's not just the one sector that is explained in the context. We can find out which are the other sectors can be simultaneously growing, which are very close to that sectors. Idea is more production, more emphasis on the particular form. The growth is expected to be there, and the forecast for per unit cost is expected to be less. Hence, we are explaining this as increasing returns to scale. Agglomeration is also a source of work. One of the theories will be discussing in the afternoon session called gravity. Through the gravity, we can address some of the aspects of minimizing cost, right? Another one is called HHI index. So far as methodology is concerned, since I am not writing specifically on trade, but I am teaching and understand the theory very correctly, Dr. Pavel is to give you the right direction about some of the context. But I can give you the theory behind it. Another, probably I'm not specifically mentioned, called decreasing returns to scale. Decreasing returns to scale is the eventual outcome in almost all the industries. We have studied in theory. That's the natural outcome. Yes. If it's the natural outcome in the long run, the country or the sector is bound to face the decreasing returns. So how that can be actually replaced with some forms of changes is another challenging aspect. But here, so far as school of thoughts are concerned, decreasing returns and its conversion to or its transformation is not specifically mentioned. Maybe some of the authors Pavel will specifically mention, but I have read theory that even if some of the sectors are challenging in terms of or evidence with decreasing returns, but with certain degree of changes and its allocation of resources, that can be also tapping economy of scale. Okay. I again wanted to mention these two: intra-industry trade versus inter-industry argument. Um, Ideally, it's considered to be complete specialization in classical, period of expanding international trade. Complete specialization means that once a country tap its potential benefit, country must be specializing completely on that product and maybe zeroing down to another sector. That is the simple answer of complete specialization. But if you cross check with the microeconomic understanding of complete specialization, uh, the product which we are thinking, the product where complete specialization is possible, if products are largely substituted. Wherever you have trouble, it is our classroom, 5 days. Otherwise, you cannot stay correctly. Okay, so try to struggle, change with me. Okay, that's the right word. Try to change with me whether I answer, not answer. That is not of thinking or your issue. It is of our issue. So enjoy your classroom by arguing. Okay, we are not taking negatively. Let me make it very clear. We are highly experienced. Okay, experience of dealing with these things, and we'll note it down. If something is missing somewhere, we don't try to note it down and address it. Okay, coming to this aspect, so far I'm only almost 12:30 now. I have almost, we started around what time? 11:35. So almost 1 hour gone. One slide. Okay. So one slide so far with the help of you only. But now we have to make it a little faster, right? I'll give you some evidences. And so that good that you have been emphasizing, I'll pass on some information to Pavel, where Pavel will be discussing more on these aspects, whichever you are suggesting. Coming to inter versus intra-industry trade, somewhere we say partial or intra-industry trade. Inter-industry trade was the outcome due to the classical phase of international trade. Is there any difficulty in understanding inter versus intra? Not the answer, correct answer. Intra not within the country. Intra-industry trade. So far I am completely explaining about trade with other countries. We are not counting trade within Uttarakhand to Delhi, Delhi to Bihar. We are not discussing that aspect. We are international people, right? So we have to discuss international trade. Anyway, coming back to our idea, intra-industry trade.
Model even can be used to these states. Like these states can be viewed as small local economies.
Maybe, but let's not discuss within the boundary. Okay, more or less rules and regulations are.
No, that is nothing.
So we are not discussing much on India's transaction. Okay, even that is not the answer of intra-industry trade. You have already studied. That is what I am expecting you. Any answer for international trade?
Maybe I'll get the other way around.
Uh-huh.
But inter is between two industries,
Mm.
like exporting phones, importing phones of different. No. One product and a different product. Product A and B, we
Products
are
are completely
exporting.
different.
But intra is when we go for one quality of phone and importing another quality of phone.
Correct. Precisely that is the answer. Let's understand the theory behind it. Why we are emphasizing intra-industry trade due to imperfectly competitive setup. That is our idea, not just the single word. We are actually connecting each of them. This assumption, that assumption, this and that, everywhere I'm connecting to explain the context. So, first of all, industry-wise, they are completely different. So, that is called inter-industry trade. Here, phone is exchanged with vegetable. Okay? Or laptop is exchanged with medical products. Like India is importing laptops from other country. Then in return we are actually giving medical products. That's completely, that is the answer for inter-industry trade. Industries are different. Fine. Now, around 80% of the transactions are through intra-industry, not inter-industry. The huge percentage are actually from intra-industry segment. And its potential values are derived through intra-industry. Now, most important example is petroleum products, where India is the net exporter by value, not by product, okay, by value. Okay. So petroleum products, we are actually getting the crude oil, refine it, add value to it, process it, and re-export to other countries. Same industry, same, right? Within the same industry, products are exported. That's called intra-industry trade.
Sir,
No.
correctly I'm saying all of
Is
the
it the wrong answer? You should find it.
Actually, I am going to pay policy. The theory and everything is fine. So, like we are purchasing the petrochemical industry, they are not very clean. Which their environmental consequences are bad. So, even if we are getting through exports, so these industries promoted for environmental reasons.
Oh, my timeless question. This is the one where you can translate it in publication. The good paper can be written. Okay. So whether it is contributing or not, this is how nowadays A-star papers are written, isn't it? So I cannot answer it to you, to be very frank. But the idea is correct. I'll simply say yes. Yes is the answer. Okay, coming back to the theory. Testing with environmental implications of refining, cleaning the product, quality indicators, trademarks, etc. Other results, agendas. I cannot. It is not that easy to just answer. Only yes, I can answer it. Yes, your idea is correct. You have to.
Sir, while you're talking about specialization, are you talking about production process specialization or transaction specialization?
There are two ways again. Initialization is managerial efficiency, or it is non-managerial efficiency, or it is pure efficiency. Then, within the efficiency manager also, it is actually we are emphasizing more mainly on the process or on the product, where innovation is actually addressed. Innovation is mostly in Indian context, it is process innovation. Good point. You have raised it. I think specialization, which we said, or the intra-industry is the answer for international trade. Most of the basket of or the value of the product where transaction is made is through intra-industry segment, and that is through process innovation. Correct. Good point. No answer is when you are describing thing, it is to process. India is actually large and tapping benefit due to process innovation. Okay. So anyway, those can be evidence with the data, but since I'm not explaining the data, so you have to reserve this question to the later session. Okay. Example. Intra-industry trade. Other than that, okay. Other than that, okay. There are so many.
So is it like car manufacturing where we have lower segment car plus higher segment? For example, one country is focused on lower segment car that's coming within the industry, and other country focuses on higher segment car.
Higher segment in the sense, maybe by value, maybe by some features, differences, right? So higher lower wise is defined based on some quality indicators. So that's also perfectly an example of quality differences in intra-industry.
There, I think one country is specialized in producing lower segment car, and the other country is specialized in producing higher segment car. So that's what specialization means.
Okay. Are you confused with this specialization by complete and incomplete wise?
Yes.
Intra. Okay. Coming to it. It's actually purely due to quality. When I say it's a phone, maybe India is producing. Even forget about this phone. Think about Apple. Apple MacBook. MacBook is largely used by people in the US. But that doesn't mean they are not importing other computers. They're also importing other computers because of some difference in features. In that segment also, even if they are much better in producing this quality is still better, still they're importing. That means we are attaching the answer as intra-industry trade. Now coming to specialization. So also specialization. When you are actually emphasizing producing more of the variety where quality is ensured and can differentiate the product in the global market, that's also still once called as a specialization. But complete is not complete specialization. It's called incomplete specialization.
This intra-industry trade is subject to this level of aggregation.
Degree of
Yes.
aggregation.
Means if you restrict it to like 1 digit, 2 digit classification, there will be more intra-industry trade. But if you diversify
To 5, 50 digit or 6 digit level, it is very difficult to actually explain. Overall, industry wise, we can find out whether within the same industry, still products are actually exchange each other. But in the very small, 5 digit, 6 digit level classification, it's very difficult to find out which industry you are. Correct. That will be explained through the data. But idea is complete versus incomplete specialization. Do you remember why the complete specialization we are bound to get corner solution? Anyone remember this?
labor.
Corner solution. Do you remember that idea?
No, not corner.
Not corner. I'm referring to X and Y as a product produced by country A. Okay, and another country is also X and Y, country B. So we are bound to get a point for country A is here, for country B will be here. Maybe of this. Okay. Now we'll be mentioning that for country B, country is bound to produce here. That's the answer for complete specialization. If the solution is in between this and this area, not the border points, that's called incomplete specialization. And we are bound to follow incomplete specialization when the market is imperfectly competitive. Remember, the logic is go back if you have forgotten and recollect those ideas, discussions. Complete specialization is the eventual possibility when X and Y are largely substituted or perfectly substituted. So your function, let's think about a microeconomic, perspective, where your utility, I'm just discussing through utility function at this moment, then we can extend it. Use a function of X and Y, X and Y, X and Y, and you have a budget function J is with function of again income level and then the PX and PY. Okay, so this is what your budget function is, and we are simply saying that your budget function for simplicity is linear to explain the fact that your utility function where we can able to maximize. This is what we studied. But if it is non-linear, ideal utility function is not linear. Linear in the sense, if it is linear, then u is equal to maybe 2x plus 1. Maybe this one is a linear function. Or x plus y, whatever you can say. It's a linear function. When we make it quadratic, it's actually or square or cube, it's not going to be linear. When this is the case, we can draw the utility function to be linear. And let this be our utility function, u equal to x plus y, almost equal distance, right? And your budget function is also linear. Budget function, let it be, it's just a linear one like this. Is your budget function, Z function. And the slope of this one is minus pxy. Budget function is minus px by py. And this is marginal unit of x divided by unit of y. Isn't it? Utility function that we can easily do. Now we know that this is our utility function, not this. This is the one. Okay, this is the slope of the budget function. When we know that my utility everywhere it is same, everywhere it is same. So if I will be actually picking up this point, so I'm maximizing a utility, so I can minimize the budget, the least budget actually at this moment on at this point. Not necessarily it is fulfilling both the conditions, but ideally we are actually getting the best choice given the constraint. So what is the problem here? Why we are actually bound to reach at this point, and this is our best point only because our utility function is linear and our budget function is linear. Otherwise, ideally we say the choice function should be incomplete. We usually say based on these, we say this should be our maximization point with the assumption that our utility function is non-linear. U is a function of maybe, it's a Cobb-Douglas function or maybe with any other form, right? So when your utility function is linear, then you will get somewhere between these 2 points. Now I'm linking this when it is convex to the origin. Now I'm linking this to the context of international trade to address complete versus incomplete specialization. A country is actually having 2 products and 2 products with budget constant. When 2 products are exhibited with linearity in terms of choice, okay, or in terms of in productivity as well. When 2 products are, in this production function exhibiting constant returns to scale largely, and whatever you do, your production function is bound to be linear. Given your budget, you are actually bound to choose a corner solution. So country has to pick a single product so that country will grow. Getting my point? That's the eventual outcome. Hence, in classical theory, market was considered to be perfect. So the production function which we say is actually linear by assumption of the market. When it is actually non-linear and when it is imperfectly competitive market, actually that production function is not linear. Okay, so in that case, we have imperfections. So countries will actually eventually get certain point in between the extreme possibilities.
Sir, if one country is a large country, another country is a
small country versus large country. Okay, you are actually linking it to a possibility of okay. Offer explanation is actually made to offer funds. How much a country can able to offer the need of the large country. So why it is bound to be a corner solution? Because for the small country, rest of the world is perfectly competitive, isn't it? Hence, it is bound to be linear. So the eventual outcome is at the corner. Okay, but the better explanation is made through offer curve analysis. How much a country can able to offer, right? So let's not go into these details so that some of the participants might be in trouble because I'm leaving many arguments in between. So connecting each argument might be difficult. Okay, let's not go that much. I just try to explain why we're saying complete specialization. It is because resources the country is poising poised with are more or less substituted. And in earlier cases, why those are substituted? Because they have limited resources and they are mostly presented through labor units. But now, over the time, they are not only laborers. So they are not divisible at all. They are not even, carried with any combination you want. Okay. So the market might be functioning differently. Market might be, taking a side to some of the parties which are attached with the market. So when we say market is actually bound to be following certain degree of imperfection, then there is a possibility of economy of scale. Because some of will be specializing in wherever some firms observe that yes, this is a potential area, this is where we can gain more advantage, so they will be allocating more resources. And with the more allocation resources, maybe through process innovation, maybe through product innovation, maybe through any other managerial approaches, they can maximize the profit, or there will be evidences of economy of scale that will eventually lead to innovation. And through innovation, then country might actually go for the farm specific advantages. Okay, those aspects will be discussed later. I think more or less concept wise I have discussed. Okay, let's proceed to the next one. I have already discussed many things here. Now, classical theory we have discussed a bit. Regarding technology, look at this. This is what I said. I changed that. Technology differs across countries. Each has fixed productivity per. This is what you have said, no? Technology in Ricardian model. Technology was there, but its total factor productivity was the call for explaining technology. Okay. And mostly it was supply side discussions. So, okay. I will be actually discussing these things. I think we have emphasized. We will take you through to other aspects. I have to be a little fast. I think otherwise I may not cover. It's already about to hit one. We have to discuss other models. Consumer preferences, farm level. Let me quickly discuss some of this. Usually international trade and in the context we have unfolded a couple of minutes back was starting with classical, then some neoclassical approaches. Now, some of the interesting aspects of the neoclassical approaches of international trade will be discussed. I'll be actually unfolding some of the stories. Likewise, we started discussing about specialization, how far it is complete, and why is it complete. And in classical theories, most they have simply written one of the assumptions is completeness of specialization, or why it is complete. If reason is since factors are more or less substituted, so factors if they are allocating in any of the product are largely substituting each other, and perfect substitutability is the answer for producing a different product. Hence, the outcome is complete specialization. Okay, so that we did it. Now I think I will explain some of the explanation of clarifying the strategic traits which is possible through imperfectly competitive structure, and potential benefits are also derived through intra-industry trade, and some of the potential advantages are also derived due to concentrations. That's called economic geography. Therefore, our next lecture, somewhere a keyword we mentioned is economic geography, and where a role of gravity is emphasized. And so gravity or the call for economic geography can also be explained through integration of the country. Integration. So what are the important features where integrations are actually defining the gravitational forces in international trade framework? So BRICS countries, for example, Eurozone, for example, are deriving more advantages due to their economic integration. Okay, so there are different forms of integration as well. Maybe through PTA, preferential trading agreement, maybe through economic union. So we'll discuss some of them in our later model. Now, this is overally discussed in different literature and different trade books. I think I should explain one or two. Everything, whatever we're saying, these are live recorded. These are live recorded. There is no point. Okay, I will be sharing everything. Once you join this course, it is open.
Sir, in new interactions, you have mentioned geographical economies. What do you mean by geographical economies? related to trade or labor or production? What about it?
Okay. Okay. So far, in my previous slide, I was discussing about innovation through specialization of the product. Now, in the other advanced model, they are discussing it's not just specialization by product; it's also specialization by proximity of the countries. Like SAR countries, for example, we can have a bigger market. Okay, or BRICS countries, for their most of the financial indicators and or economic features are similar. So they can have similar rules and regulations. They can have single currencies. This is how in the present time you have checked the articles published in Economic Times and other papers, the standard, etc. Why Trump government is actually restricting those foreign. One of the reasons is the fear of BRICS currency. I cannot, since it is recorded, I'm not attaching all evidences at this moment, but I read very clearly that if BRICS currency is formed, and all our transactions will be not through current rupees only, it's through BRICS currency. Likewise, euro currency is famous for that. Now, in that case, demand for dollar will be very less. Okay, so one of the evidences of economic union or geographical economy of scale is through a currency formation. Okay, financial integration through those similar countries. If they form or create a new currency, it will be integrating the countries more. Their market potential will be more. They will be specializing more on products. Isn't it? More on specific products. And the products which are located in the world will be with the denomination of maybe BRICS currency, not necessarily with rupees. So that as a member country with full potential of its resources can tap the benefit. And your question is that how far integration or specialization works in this case is due to the geographical proximity. Not necessarily they are locating together, they are actually locating in different places, but their policies are similar. Most of the policies are expected to be similar. Okay, can also take advantage. Offshoring and outsourcing, you have also read earlier. Offshoring, that's also an answer for economy of scale.
So you are talking about policy. What kind of policies will they have so that it is suitable for the countries who are offshoring their activities for their production?
Okay. Okay. For example, in most of the products, China claims that it is made in China. So, assembly lines are different than that of manufacturing lines. Many parts of the car maybe are actually manufactured, not necessarily assembled in that place. So, assembling unit are actually in most of the places in China, they are assembling products. India is also telling in some of the products they are still assembling. Anyway, why assembling? Why a country who is producing cannot assemble? Assemble is another degree of specialty. Assembling the product is also another degree of specialty. So where more, if we are locating everything together for a specific job, we can tap the benefit in terms of its cost of production. Like you must have seen markets to make it more lucid for this. You must have seen Nehru Place. Those are from Delhi. Nehru Place is the hub for computer and peripherals, electronic market. Sometimes earlier I wondered why you are selling. Consumers are in Rohini, somewhere in North Delhi, East Delhi. They're far away, 2 hours travel for 2 hours purchase. Why not your unit should be also opened in Rohini only? Why you are locating here only? It is already proven in most of the calculations that if they are located in one place, geographical advantages are derived and more selling. isn't it? So assembling, offshoring and outsourcing is another example. Offshoring and outsourcing, like BPOs, etc. BPO, most of the BPOs located in Gurgaon, etc. They are actually outsourcing their operation. Their company is located elsewhere, but the operation is made through call centers in other places, KPOs and BPOs, and that's related to offshoring the product. Then, sorry, outsourcing the product. Offshoring is basically you are assembling it is offshore. And why we are offshoring in Mauritius, most of the case, because of tax savings. Because Mauritius earns, they get multiplier effect due to charging very less taxes. They know that if more companies across the globe will be utilizing our space, there will be more agglomeration and more employment and more GDP.
So basically, it is about cost minimization. How we can minimize the
Cost. That is all about economics.
So you talked about the UN creation and the possibility of creation of children's parents. So how practical is that? Because I think European Union, they all are similar kind of economy. In BRICS, having the same set of fiscal policies and monetary policies for those countries is very different. Even in Europe, we have seen Eurozone crisis.
Okay. I can give you 2-3 reasons why it is possible. All are developing countries so far as their official status is concerned. Isn't it? Official status so far as their GDP and its growth is concerned. Somewhere, India or China has degree of differences, but the GDP and its composition and its sector-wise contribution more or less the very same. Even Brazil as well. And by their financial indicators are also not very much by their monetary policy and their stability related indicators. Okay, so imagine countries who conquered the world except Brexit. Britain was earlier also part of this. So why Britain choose the path of leaving that group? Because they calculated very clearly that it's not viable for us to be attached. But now probably that is not helping much for the Britain to gain. But anyway, that's a different analysis altogether. Let's come back to our BRICS and other SARC setup at all. SARC it is different, where India has edge over many indicators, but in BRICS, all the countries are comparable. And of course, it is the leadership of the country that will be defined. It's the political call to streamline the possibility of specialization or making a full-fledged union. So not yet potentialities, but if you are expecting a clear answer, I think probably given the leadership cannot be said. It will be right. That's my as a faculty. I can clearly say not. I cannot visualize clearly it is going to be settled the way you said just now.
Non-input is also expanding, so we are expanding more and more.
And there are actually border conflicts as well. Each country somehow are tapping benefit not just by the economic or by regional advantages. They are actually also tapping to political advantages by supporting one or two countries through their political connections. They wanted to make certain differences. If, for example, India and China, we have many advantages in terms of communication, and earlier it used to be mentioned as India has advantage over communication over China, but now China is better due to the AI with the help of AI. Any sector you are now mentioning, communication can easily be made in China. Okay? So in official language or in estimations, they hear that our communication is even better than that of India, even if more English-speaking populations are in, or more youths are still in India. But my answer for this is that depending upon the political negotiations and the external affairs ministers, it is possible.
Once by because China is investing so much in the research, but we are not doing that.
R&D especially. R&D per capita R&D expenditure is much higher than that of India. So any those are research claim. We cannot just simply give yes and no answer. That's injustice to that's clearly an injustice if I conclude that no, this is not done. This should not be the answer. India should not do it. That's not a respect to some of the crucial decisions. But we can argue that where India can do, where India cannot do. Okay? Anyway, come to the theory. My purpose of these two lectures is on theory, not on practical side. Okay? So we discuss about almost all the.
You were talking about assembly line and production line. Long term for a country. It is good for a country to only assemble the products because there is no innovation involved. We are doing great. We are only GDP going higher. But for the long term, it is profitable for development.
If you're counting for the long-term perspective, most important direction is R&D spending and where product innovation and product-related specialization is going to play. It's not just assembling line. Okay. Assembling line, of course, we can, by yes, some degree of specialization we can do it, but we cannot claim it our innovation. We cannot. Okay. We only tap certain benefits. But answer
To be development for a particular manufacturing has to be there.
Has to be there. If you remember, just post-COVID period, 21-22, one popular message was coined or created by government news channels in India that let's stop the consumption of Chinese product. Isn't it? So, and why is it the case that they were spreading these rumors or messages to media? They are influencing the consumers to avoid consumption. Why was the cause? Since we are discussing theory, it's very much relevant to discuss.
Also, manufacture within our country rather.
See, customs officers are there. They could have clearly closed it. Why to put it in the media and influence the buyers not to buy?
अगर डायरेक्टली अगर हम उसका कस्टम से लगा देंगे अगर माइंड हाउसहोल्ड के पर्सपेक्टिव में आए तो चाइनीज को इस्तेमाल नहीं करेंगे इट्स एन इनडायरेक्ट वे of stopping that products.
So by stopping the product through media, it also media. You are saying media.
In that case,
it's not like they are making a phone call to me or to you that please you consumption bond person. That's not the way.
Officially, media officially.
Officially, they circulate through media. Anyway, we are actually there are different different perspectives whether it is multimedia or non-multimedia. Several discussion. Idea is my point of understanding why it's the case that customs officer, trade borders are there. They could have actually stopped, right? So what was restricting them not to actually follow that route, rather they follow the indirect route? Is there any answer?
We are getting most by trading with China. Their products are very cheap as compared to what we are getting. So somehow we are getting some kind
But why is the fact that they are actually utilize the media to influence consumers of India not to consume? They could have stopped it, right? Imagine this. They could have stopped it at the border. There is no point of influencing.
But how do we measure the
But the long-term impact is
Very good. Please go ahead. No. I should speak now. Okay. Okay.
The long-term impact to be maintained psychologically, consumers need to be influenced. And that comes from the media.
जो भी है ये आंसर नहीं है. Okay, coming to it. Point is right. Whatever you say, I can understand. A common person understand that way. But actually, that's not the answer. कुछ तो बताओ तुम में से you must have read.
being a member of WTO director by
As per the WTO norms, we cannot impose taxes or tariffs directly on the products that are imported. There are some limit, 10% limit on agricultural products. We cannot just increase. You cannot just restrict the custom. They also retaliate, right? They are going to retaliate. So then this is going to disturb the economic transaction. You have indirectly answered this question, but idea is why indirect persuasions are actually made. Why is it the case that consumers actually we are going beyond the theory now? We are, as if we are now the researcher. Now we are empowered. We have got the data. That explanation. Okay. So I just given you the context to think about, and somewhere we'll address the question. When we have policy session, maybe in the question, we can think of what would have been the ideal way of bargaining in WTO negotiations. Okay, maybe in the gender perspective, you might have read the context called TBTs and SPS, sanitary and phytosanitary measures, technical barriers to trade. These are the two indicators where developing countries have better advantage in imposing restrictions to the product. So there are many trade wars related to these, where developing countries used to tap benefit in these two channels. But anyway, so far as gender is concerned, gender composition is concerned, labor standards are concerned, whether those farm-specific products which we have been emphasizing in the modern theory, while we are actually trading to Europe, for example, of our product, which is very competitive, which is productive in nature, but they may object our product through these two channels. Your gender composition is not correct. Okay, you are not justifying your labor standards. So we are cancelling your segment. You are cancelling your consent, which is mixed. Okay, so some of the interesting aspects are there in trade context if gender composition is not clearly addressed and decent labor rules are not clearly made. Please.
Sir, you said why Indian media is promoting to consume China's goods. There can be 2 or 3 points of explanation behind this. First, we don't want to use their goods in our country because we want to increase our production. Second, we are big player in the global production networks. We want to supply our goods to the world. So that can be the other point why we are not promoting imports from China, and we will be somehow promoting our exports by being a larger player in the global production networks.
Okay. There is no disagreement to it. We say that we are not promoting Chinese market. Okay. Single answer is we are not promoting for sure due to several reasons. I am saying why is it the case that it is indirect? The process is indirect. Why not direct? Because of the WTO negotiations, rules and regulations. Okay. So, while we are explaining the new trade theory, we are supposed to also discuss something on whether the countries are following the standards of labor laws. It's not just the productivity that matters in the present time. It matters whether you are respecting your laborers or not, your factors. These are very less addressed in the modern theory. Probably Professor Pavel will address some of those things. Okay? All right. So,
unsuccessful in solving disputes.
So anyway, I cannot able to keep complete answer. Some of the revealed comparative advantage. Have you read earlier? Comparative advantage wise, you have read. Revealed comparative advantage will also estimate in our afternoon lecture. So some facts will say that even if India is not good at manufacturing, but through RCA calculation, we can prove the fact that India is even more competitive. Okay, so anyway, I think I should keep this for the afternoon lecture, but still something is not yet explained, so that I can. Okay, production possibility frontier, straight line versus concavity structure of PPF. You remember very well. If you don't remember, I think still it will be useful because Pavel might be using those things frequently in this lecture to explain the idea of establishing the farm level, etc. So I think this is how we explain whether a country is going to have complete specialization or non-complete specialization. Just to recap what you have studied in hexarolin model, now you must have seen I'm not actually explaining by each bit of mercantilism, not by each bit of Ricardian theory, not by stepwise relative comparative advantage, not even RCA, because that's not necessary, not so much of theory of this. I'm just recapping what happened, what you have studied, what extra we are going to add it. Okay. So coming to HO theory, there are two extensions, two important extensions. One is called HOS theory and another is called SS theory. Hexer-Ohlin Samuelson theory. This side, these other two side. This side I'm actually mentioning, and another is called Samuelson, Stolper Samuelson theorem. The difference between these two, of course, these are emerged from this. Emerged from the factor endowment theory. Difference is HOS where factor price equalization is mentioned. इसको ज्यादा बोर तो नहीं लग रहा है, बोर लग रहा है तो भी मैं छोड़ने वाला हूँ. That's for sure. And anyway, we are almost hitting the last time, but I wanted to give you this direction so that other sessions are going to be good for you. Okay. So HOS theory, it is all about factor price equalization, whereas Hexer-Ohlin theory, it is just about whether country is utilizing its abundant resource or its scarce resource. If it is abundant, then it will be exporting, and otherwise be importing. That's only the answer. Whereas somewhere some justice is given by explaining whether the factor prices which are involved in the trading or in the exchange are equalizing. So the wage rate in first home country is against to wage rate in another country eventually are considered to be equal or near about equal, or the capital and its price structure are considered to be equalized. Whereas SS theory, they added that it's not just the W1 equal to W2. Within the industry also, across the factors, there are also possibility of equalization. So factor price equalization are explained not across the factors, it's also within the factors. Like within the factor means laborers, W1 equal to W2, then R1 equal to R2. So then Stolper Samuelson basically mentioned is W1 is equal to R1. Like imagine a simple context in India. In India, it used to be very lucrative, for some specific job, like corporate job. The moment you hear the word, earlier the notion, in my childhood, I remember engineers are the best in the country. They are the higher paid, segment jobs. They used to get the best salary. Engineers means the best. Now imagine engineers minus this this place, IITs, engineers, another one. I am studying in IIT and voices are also recorded. Still mentioning in most of the IITs are meant for, I'm just actually trying to address this question, not criticizing or not even mentioning that aspect. I'm just trying to understand that, in the IITs, the purpose of IIT is to get best engineers like me. Okay, I mean best engineer being in IIT, social scientist. So now you compare among IITs and the BTechs, the outcome is Chetan Bhagat, the engineer. Okay, Bollywoods, Himalayan trekking, okay, social media, blogger. So they are the outcome of IITs. Babas, IIT Babas. Anyway, media highlighted a bit. But my purpose of mentioning specialization should actually derive the best result of it. IITs and its spending by government is to make good engineer. They should make good bridge or very good at data handling as well if they are the engineer related to data. So data science at least. Now the BTechs or the people in civil engineering, outcome is actually they are good at coding. Okay, outcome at the end they are good at coding, not they are forgetting their own specialization. They are actually taking more of social science subjects. Okay, because of because of the fact that Deloitte is going to hire more people if you take economics or finance as a subject. Okay. So, what is my answer? Looking at Stoffel suppulsion theory, is just by engineer oversupply of something, or in the inclusion context, if you are not, your product is not actually catering to the need of the larger mass of the population, then your payment structure or the rent out of it is considered to be low. So how they are actually going to get it, like KPMG or Deloitte or PwC, whatever they are going to get it with a non-engineering guy is even paying better than that engineering guy. So W1, which we are seeing, there used to be, the blue color type of job, where R1 is considered to be, R1 means interest rate, used to be through the finance of the product, maybe with capital, etc. So now, over the time with specialization, there is a possibility of also equalization of these sectors. And in trade is the best possibility where the products in the globe is equalizing their factor prices. Okay, where within the country it is difficult. Some other directions, have you heard about Ricardo-Weiner model? Ricardo-Weiner model based on time framework. Which is new trade. Okay. Ricardo-Weiner model. I'm just adding 2 points. I have not extended this. We simply say that the argument in Ricardo-Weiner model is on specific factor versus non-specific factor. If the factor is very rigid and very specific, another is labor. Labor is not specific. Labor is considered to be very mobile. It can be utilized in any sector. Now it depends on one of the answer actually I am going to give it is called neoclassical ambiguity. These are called neoclassical theory, right? So neoclassical theory suggests that there will be factor price equalization. Yeah, the outcome of the neoclassical theory of trade. There will be factor price equalization by W1 equal to W2 or W1 equal to R1.
This is like a relative factor price equalization or absolute factor price equalization?
Relative.
Why W by R will be equal in both the countries? Or W1?
No. Okay, in both ways. All the experts largely said relative W1 by R1, that one. Also, they say that over the time, by absolute terms, also there is a possibility of equalization. As I just said, the engineering guy is not paying, not being paid higher than that of the other factors. And similarly, those are taking loans. Their advantages are not necessarily higher by investing in capital as against investing in labor units. Okay, there are different ways of explaining. Okay, I'm coming to the explanation of time value and the labor where it is attached with a specific sector. When any factor is rigid enough and highly specialized, we have been discussing about specialization and its innovations. We have to also discuss about how much benefit by your specialization a country can able to tap. New classical ambiguity is that it is not necessarily the fact that all the factors are going to be rewarded and there will be factor price curve. It depends upon the rigidity of the factors. Let's look at Saranpur here. Very near, metro 1 kilometer perimeter. They are specialized in, textile, artifacts, and there are many exporting sector shops in, Saranpur. Now, my concern is if by a country's policy, a factor which is higher, factor which is higher, or a labor which is hired for a particular company or a segment, and that product is exported. If that is exported, of course, there will be reward. But if the sector by any reason is not demanded in the international market, then there will be some problem to that factor. So the factor which is specific and also internationally demanded will be getting more reward. Clear now? But a factor which is not specific like labor units. Yeah, that's how I should leave this and I'll join another one. But I cannot predict the future when my mobility as a labor units, mobility is very huge. I only know, for example, in plumbering work, for example, suppose some of the labor they're very good at plumbering only. They are trained, well trained how to have better supply, fast supply of water, how to have a best design of plumbering. Those labor units cannot be just utilized anywhere. They cannot be just utilized by Flipkart or Amazon or by Zomato. Zomato mein thoda kaam kar lo. They cannot do productivity. Okay. My purpose is when a factor is well trained, government has already trained on specific factor, they are well trained, but eventually those sector is not that demanding. That means if international trade is demanding a specific factor, then it will be dividing. If international trade is not demanding that one, especially for that sector, then they are rewarded less. Whereas other sectors which are mobile in nature, very mobile in nature, not very specific, their return is ambiguous. If I move to PwC and PwC is growing, then my reward is high. But I don't know what is going to happen in my P2, time period 2. Hence, new classical theory and its contribution to factor-wise circulation is ambiguous. Understood? Clear now? Tapping all aspects. This is just a T parameter. Another dimension is depending on the durability of the product. If the product is durable enough, then its distribution of receipts or distribution of the rewards or the equalization is also expected to be different. If it is very perishable commodity, then its distribution function is different. If it is durable like FMCG products, then its durability and its reward is also different. These are actually the extension of Ricardo-Weiner models. Okay, so some of them can be explained. I think I have almost discussed outsourcing, offshoring, directly, indirectly, which are explained as part of new trade theory. Okay, I think we are not discussing much on general equilibrium analysis with the help of offer curve. So this aspect better not to emphasize. Even tariff or non-tariff, tariff and its small country versus weak country argument, some of them will be discussed later. Let's not discuss everything at this moment. Okay, so if it requires in some of the session, I will actually again emphasize and explain. Okay, so in between, you guys have asked so many questions as well and clarified. If you have still something reserved or something you want to verify, you can ask. I'll be happy to address. And if you are perfectly fine, we can close the session. Yeah, I think I have already completed the time. Yes, already 4 minutes ahead because of the ahead now. All right. So we started a little late, 5 minutes. So 5 minutes is compensated more or less. So I hope, guys, the session is formally over. आप close कर दीजिएगा. So now I have to discuss some guidelines, some important directions. Some of the guidelines I mentioned is about our